Tesla just pulled off a comeback nobody saw coming. After months of losing ground to BYD, Tesla's latest quarter beat expectations. Deliveries jumped, and for a moment, it looked like the rivalry might finally be tilting back in Tesla's favor. But before you write BYD off, here's the question nobody's actually answering. What happens next? Let's start with where things actually stand. For all of 2025, BYD sold 2.26 million electric vehicles worldwide. Tesla sold 1.64 million. That's a gap of over 600,000 cars. And it was the moment everyone realized BYD wasn't just a regional player anymore. It was a genuine global threat to Tesla's dominance. Then, 2026 happened, and the story got a lot messier. Tesla briefly took the lead back in the first quarter. BYD reclaimed it by the second quarter. And now, with Tesla's most recent comeback quarter, the two companies are closer than they've been all year. So who actually wins from here? To answer that, you have to look past this quarter's numbers and understand why each company is playing a completely different game. Tesla's comeback wasn't really about outselling BYD. It was about proving Tesla could still grow at all, after several quarters where investors were genuinely worried growth had stalled for good. Price cuts helped, a renewed push in the US, and Europe helped. But most of that growth came from markets Tesla already dominates, not new ground. Tesla didn't expand the map, it just performed better inside the map it already had. BYD's strategy looks almost nothing like that. BYD isn't trying to win by squeezing more sales out of existing markets. It's trying to win by making the map bigger. Over the past year, BYD has aggressively expanded into Europe, Southeast Asia, and Latin America, regions where Tesla has minimal presence and even less brand loyalty. In several major European markets, BYD has already outsold Tesla for multiple consecutive months. That's not a one-quarter fluke. That's a company building permanent infrastructure and permanent market share in places Tesla still hasn't seriously shown up. And there's a structural reason BYD can do this so aggressively. BYD builds its own batteries. It controls its own battery supply chain end to end, using its blade battery technology, which means it isn't at the mercy of outside suppliers the way most car companies are. That vertical integration lets BYD build vehicles cheaper and pass that pricing advantage directly to customers in price-sensitive markets. Tesla, for all its manufacturing innovation, doesn't have that same level of built-in cost advantage. So does Tesla's comeback quarter actually matter? Or is it a temporary bump in a much longer decline? Here's the honest answer. It matters, but not for the reason most headlines are suggesting. Tesla's comeback proves the company still has real levers to pull. Price cuts, new incentives, aggressive marketing pushes when it needs to. That's genuinely valuable, and it shows Tesla isn't some sinking ship. But none of those levers fix the deeper issue, which is that Tesla is playing defense in markets it already owns, while BYD is playing offense in markets nobody's claimed yet. A great quarter of defense doesn't cancel out a full year of aggressive offense. There's also the question of what each company is betting on for the future, because that tells you a lot about where they think this race actually gets won. Tesla is leaning increasingly on things beyond just building more cars, robo-taxis, full self-driving software, and energy storage. Musk has been fairly explicit that Tesla's long-term value isn't really about vehicle sales volume anymore. It's about being a software and AI company that happens to make cars. BYD, on the other hand, is doubling down on exactly what's already working. More vehicles, more markets, more manufacturing scale. Two completely different bets on what actually wins the next 5 years. If Tesla is right, and the future of this industry is really about software and autonomy rather than raw sales volume, then BYD's current lead might end up mattering a lot less than the headlines make it seem. But if Tesla is wrong, or if that transition simply takes longer than expected, BYD's growing global footprint could turn into a lead that's very hard to catch up to, especially once it's backed by real brand loyalty in markets Tesla still hasn't entered. So, what happens next? Realistically, expect this back and forth to continue for at least a few more quarters. Tesla will likely keep posting strong results in its existing strongholds. BYD will likely keep quietly expanding its map in places most people aren't paying attention to yet. The real turning point probably isn't going to be one dramatic quarter. It's going to be whichever company's long-term bet actually pays off first. For right now, Tesla can genuinely say it's back, but BYD can just as genuinely say it's still winning the bigger picture.